In this video, I'll explain what an IPO is. I'll also show you why private companies decide to go public on the stock market. And stick around until the end of the video for my insights on the Airbnb IPO and whether or not to invest in IPOs in the future. Hi, I'm Jeremy Zargami, and welcome to my channel. Today I'm going to break down exactly what an IPO is and whether or not to invest in them. If you haven't already, click that like button down below, because the way the YouTube algorithm works, if you don't click that like button, YouTube will show this video to less people. So to help out this channel and to help more people see this great content, click that like button down below. And please consider subscribing if you're committed to learning and growing to ensure that you have the best financial future possible. Let's get into it. So what is an IPO? An IPO is the first time a private company sells shares of its company to the public. There are many reasons that companies decide to go public. One reason is to raise capital to help scale the business faster. Another reason is for owners, employees, and early investors to sell their shares to make money. Here's an analogy that I heard the Wall Street Survivor use that will help you understand how IPOs really work. So I own a jiu-jitsu academy called Lionheart, and let's say the academy was doing so well that I wanted to expand it all over the US. In order to expand, I issue shares to the public in order to raise money. That way I can afford to lease the buildings, buy more equipment, pay for the marketing, and hire more staff. Because I can't issue stocks to the public myself, I have to use an investment bank like Goldman Sachs. Based on the value of the company, Goldman Sachs and myself would determine the IPO price, the amount of shares we will use, and the percentage of ownership that I will give up. Let's say Goldman Sachs values my jiu-jitsu academy at $100 million, and I decide to sell 10% of my company. 10% of $100 million means I'll be raising $10 million. The investment bank decides that they will be issuing 1 million shares to the public at $10 per share. The investment bank then lists the shares on a stock exchange for the public to buy, and now investors can buy shares of Lionheart Jiu-Jitsu Academy. If you got value from that analogy, be sure to hit that like button. Let's keep going. While IPOs tend to make a lot of money for owners, employees, and early investors, by the time the shares are available for your everyday retail investor, usually the stock is very overvalued. This is based on the hype that usually surrounds IPOs. The high demand and low supply cause the price to skyrocket. A lot of young investors lose money investing in IPOs because they buy it based on the hype surrounding it, which usually causes them to buy the stock at or close to its peak price. That's not always the case, but generally speaking, it's a very common occurrence in the market. In a study done that looked over 7,400 US IPOs from 1975 to 2014 showed that IPOs tend to underperform for the first 2 years. This could be due to owners, employees, and early investors selling off their stocks to collect gains, as well as day traders and swing traders taking advantage of the hype and the volatility of the stock. Once the stock stabilizes after the first 2 years and you get more data on how the company is performing from quarter to quarter, you can usually make a much more educated decision on whether or not to invest in that company for the long term. This doesn't mean that you can't make money from an IPO. Many people do. I'm just letting you know to proceed with caution because the stock is extremely volatile when it IPOs, and that could cause you to lose a lot of money fast if you don't know what you're doing. As many of you know, Airbnb recently had their IPO. There was so much hype around the stock leading up to the IPO day. It was initially supposed to IPO at $68 per share, but based on demand, it shot up to $146 per share before most of the general public was able to buy in. Its high on opening day hit $152 per share, but in just its second day on the market, it dropped 10% from its high to $137 per share. I really wanted to buy some shares of Airbnb, but I believe it's overvalued right now. So I'll wait it out and see how the company does over the next few quarters. I would love to get into the stock at around $100 per share or less. So if it drops down to that price point, I will definitely buy in. But until then, I'll just keep my eye on it and be patient. Patience is so key if you want to be successful in the stock market. I hope you got value from this video. Don't forget to hit that like and subscribe button. It greatly helps out this channel. Comment down below with any questions or feedback. I would love to hear from you all. Be sure to follow me on Instagram. I post there pretty much daily. Don't forget to get your free stocks. Get between 2 to 4 free stocks when you sign up with Webull and deposit $100, and get 1 free stock when you sign up with Robinhood. Links below in the description. Thank you so much for watching, and God bless. If you liked that video, I put another video right here that I think you will like. So check that out, and I will see you in the next video.